Now, what are you making of the general and overall climate that we're living in, and how do these various inflation reads and other growth reads really be reflected in what you're covering right now?
Yeah, I think currently we are going through a period whereby there is a fair amount of uncertainty, both with regards to the macro economic policy developments as well as some of the authorities' actions in terms of policy making. So I think from the investor standpoint, we need to watch the data development very carefully. At the same time, also looking at what the central banks are trying to communicate to us. Now, with respect to the inflation that you mentioned, clearly that is a problem to many of us here, as we are seeing the inflation still hovering at around a higher level. No doubt that some economies are seeing slightly lower inflation, but again, it is still unclear whether the lower inflation is on a sustained path to a lower level. So I think right now it does provide some uncertainty to the market, whereby investors need to take a fair bit of caution in terms of positioning in their investment.
And what is that call then? I mean, I think much of the last few weeks, people were saying this inverted yield curve is not going to last. You got to start thinking about it steepening. Are steepeners still the right call right now?
Well, I think at this point in time, the market has priced in a fair bit of rate cuts. If you just kind of look at US and in fact some Asian markets as well, I think the market is getting slightly ahead of itself. I think the central bankers are still not quite convinced yet that they have done enough. But at the same time, they do not want to provide a signal to the market that they would continue to do a lot more. I think that is where the yield curve shifting is a bit uncertain right now. So if you ask me as of now whether the steepener will be the right trade, I think perhaps a bit too early. But at the same time, given the curve has flattened a fair bit, there is going to be a fair amount of trades being put on by investors, which I think somewhat is a bit warranted as well. But I think too far of a steepener may be perhaps too far ahead.
So it gives a sense, right, Kay, let's take a look, for instance, at what's been happening in China with the economic data coming through, LPR being held here as well. Do they have any wiggle room to reduce, or should I say lessen monetary policy, in other words, ease, and do they need to?
Yeah, well, I think in terms of the room to maneuver for China, there is. Now, the big question will be whether the central bank or PBOC would likely be doing that. From my reading is that the central banks could be trying to delay as much as possible to make any further rate cuts, and therefore they are a bit reluctant. But they have also been asked to provide support to the economy, hence still leaving some room for them to kind of lower the policy rates at some point or through the various liquidity facilities. I think the short answer is, there's room, but I think in terms of whether they would do it in a large magnitude, I think there's still a big question out there.